So today, we're going to talk about a strategy that, honestly, seems a little backwards. We live in an age of AI, of digital everything, and yet one of the biggest banks in the world is pouring billions into building more physical, real-life branches. I know, it sounds like something out of 2006, but it's actually a huge clue about a major shift happening in the world of finance right now. To really get what's going on, you gotta zoom out a bit. The whole fintech world is kind of in what you might call its Season 3 dip. You know, like with the TV show? The initial excitement is worn off, the stocks are way down, and all those cool disruptors are starting to look, well, a little vulnerable. And that has created the perfect opening for the old guard to make a move.
And that brings us to the big question, right? With the challengers on the ropes, what are the giants of finance actually doing to fight back and reclaim their territory?
What we're seeing is a classic Empire Strikes Back moment. Seriously, the established players are launching these incredibly powerful, super well-funded counterattacks. So let's break down 3 key strategies from 3 of the biggest names out there.
When you boil it all down, it comes down to 3 classic power plays. First, you fortify the castle. You protect your main business at all costs. Second, you buy the roads, so you control how everything moves around. And third, well, you hand out free stuff to make sure everyone stays on your side. Let's see how this is actually playing out.
Okay, first up, JPMorgan Chase. They are fortifying the castle in the most literal way you can imagine by doubling down on thousands of actual, physical, brick-and-mortar bank branches.
And the scale of this is just staggering. I mean, while everyone else is closing down locations, Chase is planning to open over 160 new branches. It's a multi-billion-dollar bet that goes against everything we hear about the digital-first world. So what on earth do they see that everyone else is missing?
This right here, this reveals the whole strategy. The branch isn't just a place to get cash anymore. Chase is turning it into what they call a relationship engine, a hub for really high-value person-to-person interactions.
So, what actually happens inside these engines? We're talking about the biggest financial moments in your life. Getting a mortgage, trying to secure a small business loan, planning your retirement, or, dealing with the nightmare of fraud. These are the times you really don't want to talk to a chatbot. You want an actual human expert. And here it is. This is the core insight. When money gets complicated, or frankly, a little scary, people crave trust and a human connection. Chase is betting billions that the physical branch is the ultimate in-person trust API, a way to turn that very basic human need into massive market share.
Okay, next up, let's look at Visa. They are playing a completely different game. Forget building physical castles. Visa is buying the invisible roads, all that essential infrastructure that every single financial transaction has to run on.
The best way to understand Visa's strategy is to think about the old computer game SimCity. See, Visa isn't interested in building the flashy, pretty skyscrapers that everyone sees. They're focused on something way, way more fundamental.
Think about it. You can't have a city without water and power, right? Well, in finance, the equivalent of that is the payment plumbing. So Visa is going out and buying the water and electric companies of the system. Things like issuer processors, ATM networks, and real-time payment platforms, especially in huge growing markets like Argentina. And this is not a one-time thing. It's a very deliberate playbook. Just look at their recent acquisitions in Latin America. They're buying up companies like Pismo and Prisma, weaving themselves deeper and deeper into the core financial tech stack. They're literally owning the pipes. This is the buy-the-rail strategy. Visa gets that the real long-term threat isn't just another cool consumer app. It's whoever owns the infrastructure in a world where every single payment is instant and driven by AI. If you control the rails, you control the whole game. All right, finally, let's check out our third giant, Bank of America. Their strategy is all about making their basic checking account so valuable that the thought of leaving is just unthinkable. And they're doing it with a massive push for loyalty. The biggest change they made is all about access. It used to be that you needed at least $20,000 in the bank just to get into their rewards program. Now it's open to anyone with a personal checking account. Just like that, overnight, over 30 million more people suddenly became eligible for perks.
And these perks are designed to create what you could almost call a relationship rebundle. They're tying everything together: credit card bonuses, better cashback deals, discounts on loans, even identity theft protection, and linking it all back to that one central checking account.
And they're giving this whole thing a modern twist with their AI assistant, Erica. So Erica will actually guide customers, kind of nudging them toward things they can do to unlock even more benefits. It's a really smart way to turn AI into a super powerful tool for loyalty and just keeping customers around. So, let's bring it all home and recap these three powerful and very, very different strategies that the big incumbents are using to defend their turf.
And there you have it. Three giants, three totally distinct playbooks. You've got JPMorgan betting on the power of human trust, fortifying the castle. You've got Visa betting on the power of controlling the infrastructure, buying the roads. And you've got Bank of America betting on the power of an irresistible bundle of perks, basically handing out free stuff.
But ultimately, whether it's through a physical branch, the digital rails, or a mountain of rewards, all three of these strategies are about winning the exact same prize, the primary customer relationship. In this new financial world, the big question isn't just who has the best app. It's about who truly owns the customer. And the giants are making it very clear they're not giving up that ownership without one heck of a fight.